Hello, my name's Alan Foom, and today I'm going to talk about North American shale oil companies and their family trees. Now, this is spurred by two events that have happened, big takeovers in America. So first of all, the takeover of Pioneer by ExxonMobil, and then the takeover of Hess by Chevron. So again, this is a meme on Twitter. What about an acquisition? We just made one. Well, what about another acquisition? So are we going to be getting more acquisitions, and how's it going to go? So post 2020 now. Two big takeovers, which I just mentioned, Pioneer by Exxon and Mobil and Hess by Chevron. And what next? Now, the US oil patch has had a rough time since the oil price crash of 2014. And 2020 was particularly tough with several companies going to Chapter 11 or being taken over. And a lot of companies were at the time funded by debt. Now, they've turned things around. Now, shale is particularly capital intensive, particularly compared to conventional oil, because you have to do constant drilling to maintain, let alone you grow production. So you're running like Mo Farah, just to stand still. It's a tough place. But shale companies have responded to that. They've had capital discipline, new and evolving technology, better results, and a slight oil price rebound has also helped. So we go back to 2020, and there's an American petroleum engineer called Tug Iden that's plotted something, and I've taken his data and did that. So you basically had a situation at the time of the orange being the debt, the blue being the asset value. So several companies were in pretty tough places. For example, here was Apache, and Oxy was in a particularly difficult place at the time, having taken over Anadarko. Now, several had been acquired at the time: Parsley Energy, WPX, Noble, which was acquired by Chevron at that time, and some had gone to Chapter 11, some have come out of Chapter 11. So overall, a tough time, but they were coming out of it. This is again based on Tug's data. So you got production at the time. So EOG Resources had high production, relatively low debt. Ditto Pioneer. Devon, it's a bit more debt, but again high production. And then some others, Chesapeake would be a bit in trouble at the time. Noble, that were taken over by Chevron, and Oxy, which was the big daddy of the mid-size US companies. They had taken over Anadarko. They're now counted as one of the majors. So tough time, they got through it. So let's have a look at the family trees and see where they are. Now, oil patch has always, in America, has always made a lot more deals than elsewhere, where things tend to move a lot slower. And it's always wheeling and dealing and making new deals and making new companies, growing companies, companies taking over other companies, both listed companies and private companies. So the GI Ewings of this world, the real world GI Ewings. They're also parts of vassals to each other, opposed to other US-based companies, also foreigners trying to buy into the US light tight oil growth story. So the family tree starts to try to tell the story of these companies. So the first company we're going to look at is Pioneer Resources. So this has just been taken over by ExxonMobil and the deal announced. Now, Pioneer produced 617,000 barrels of oil per day, now quite respectable, and founded in the late 1960s by a merger of Mesa Petroleum and Park and Parsley. Then took over ENR in the late 1990s, Parsley Energy late 2010s, early 2020s, Double Eagle. Again, company run by a man called Scott Sheffield, very big position in the Permian, big growth story, well-run company. But ExxonMobil made them an offer that was good, and they've decided to take that on. So a little bit to the key to the diagram. So red is company taken over. Green is significant asset purchase, so that's when they purchase a large tranche for somebody else. Blue is significant asset sale. Black is company takeover merger, and then the dash blue is spin-off. So some things have been spun off. So we go to the next one, Noble Energy, that was taken over last year by Chevron. Again, innovative company. Started off as Sam, Ed, Ann Energy, after the founders' three children, Sam, Ed, and Ann. Kind of cool. They spun off the drilling arm in the 1980s, Noble Drilling, and again, drilling company's been continuing since then. They've taken over Maersk Drilling, so that's a completely separate entity. The oil company itself had continued. They've made significant investments in Israel in the early 2000s, so discovering Dalit, Tamar, Leviathan, etc. They've also taken over companies like Patina Energy, Clayton Williams Energy, Rosetta Resources, and in the late 2021, they were taken over by Chevron. And at the time, they produced 346,000 barrels of oil equivalent per day, including obviously all the gas. Again, reasonably well-run company, but looking to move on. Devon Energy, I would say, is probably one of the bigger and more active. As you can see from this diagram, shale oil focused companies took over WPX Energy, which was spun off from Williams, a large American downstream company, bought significant assets in Barnett, Eagleford, assets from Mitchell Energy, E&P assets of Pennzoil. The downstream assets went to Shale, including quite a few international assets, some large parts of offshore assets from Kerr-McGee, took over Santa Fe Snyder, Ocean Energy, and then also they've sold assets. They've sold quite a lot of their conventional assets to BP, so including GOM, Brazil, Azerbaijan, where they had quite a lot of interesting and innovative things that were going, but they decided to focus purely on shale, and have also sold quite a few assets to Canadian Natural Resources in Canada. Again, relatively low debt, 572,000 barrels oil equivalent, and always been active in the space. Now, where will Devon go next? I don't know. But they've always run a very tight ship. I mean, I was on a training course once with a lot of Devon people, and they really impressed me with how tight their company was run. Looking at the next one is Aventiv and Cenovus. Now, this is kind of a bit of a confusing chart, but they're a Canadian company. So spun off from the Canadian Pacific Railway in the 1960s, formed a company called Pan Canadian by taking over Alberta Energy Company. Big involvement in the UK. They were the original operators of the Buzzard field, the biggest field found in the UKCS since 2000, which was then subsequently sold off to Nexen. Then they changed the name to Encana. They took over Alban Energy, and then in the 2010s, they did a demerger. So they sold off all their oil sands assets to a company called Cenovus, who have subsequently bought Husky Energy. So they're focused on the Canadian oil sands, and they're producing 807,000 barrels of oil a day in 2021. And they changed the name to Aventiv. They've taken over Newfield and quite a significant bunch of assets from Freeport McMoran in the Eagleford. Again, moving forward, where are they going to go? Cenovus is quite focused in Canada. Aventiv is a little bit more both US and Canada. EOG Resources. Now, this is a chart where they don't seem to do much buying and selling, but probably one of the best run companies. They've got very low debt, high production. They were spun off from Enron, and at the time of the spin-off, they were selling off their assets in India, and I was involved in that acquisition for BG Group. Very impressed with the people that were there. Really quality people. Took over a company called Yates Petroleum. They buy and sell parcels of assets on a fairly regular basis, but haven't been taken over that much in the way of companies. Producing 753,000 barrels of oil a day in 2021. Well-run company, hopefully going places. Continental Resources. Now, this is a company that's effectively focused in the back end, and probably one of the pioneers of the US shale patch, run by a man called Harold Hamm, who's one of the richest men in America. They bought significant assets in the Permian from Pioneer, and they were thinking about going private, i.e. delisting. Currently producing 329,000 barrels of oil per day in 2021. Again, where they're going to go and how they're going to do. Chesapeake Energy. Now, this is a much more up and down company. Took over quite a lot of assets sold off some assets to Exco, Haynesville Eagleford, sold off quite a lot of assets to INEOS, a British company run by Jim Radcliffe in Eagleford, but also bought Southwestern Energy, Chief Oil and Gas, Vine Energy, Wild Horse, etc. Very much focused on gas. Both Marcellus, Haynesville, etc., produced 463,000 barrels of oil per day. They had a lot of up and downs in terms of their debt, have been in Chapter 11 and now out of Chapter 11. Quite where they're going to go and where they're going to do is another question. Diamondback Energy, or FANG as the ticker is. Again, take over Brigham Resources, Energen, Ajax Resources, significant purchases from Guidon Energy, took over QEP Resources. Again, reasonably well-run companies, 375,000 barrels of oil per day. Again, where they're going to go, how they're going to do. But they've had a history of taking companies over and making them run. Coterra Energy. Now, this is a merger of two companies, the Cabot Energy. So Cabot was a large US conglomerate. They then split off Cabot Oil and Gas as an independent, took over Washington Resources, Cody Energy, and then 2021, 22, They took over Cimarex Energy, which was spun off from H&P, took over Magnum Halter, took over Resolute, again producing 620 kBOE per day. Again, a company that's going to go somewhere. So what's going to happen next in the shale patch? Well, obviously, we don't know, but takeovers and acquisitions and mergers have been happening since the shale patch was in existence. In fact, since the American oil patch existed, more consolidation can well happen. So first of all, we've got a new paradigm. So capital discipline, rigor versus the wild debt-fueled growth, and trying to keep investors happier because there was pressures for investors to give some results in terms of cash flow, etc. That's now happening. But what next? So staying as an independent company or cash out by selling to a major or a large foreign conglomerate? Growth by acquisition. Are we going to carry on gobbling up the smaller players? There's also quite a lot of private companies in America that are owned by families or other individuals or private equity. Are they going to, the public companies, the listed companies, are they going to take some of those over to grow? Maybe they might go private themselves. Now, Continental have been talking about going private, so delisting, because that gives far more control to the management than a listed company does. Is that going to happen? Don't know. So where they're going to go next in terms of growth? Now, all of these companies are focused virtually 100%, not quite, on unconventionals. Are they going to go back to conventional exploration? Now, conventional exploration has more risk, but can have different rewards. It's a slightly different game. Do they have the skills to do that? Do they want to do that? Are they going to focus on conventionals in the US, maybe go back into the deepwater Gulf of Mexico, or are they going to go abroad again? Don't know. Possible. And how many opportunities are there left in US shale? Now, the death of US shale has been predicted by a very, very long time. Hasn't happened yet, but how many valid locations remain? How many more opportunities remain? You know, the core areas are being drilled up. You're going to slightly less favorable geological areas. Can the technology outpace the geology? Again, we don't know. But one thing's for certain, the US oil patch has been resilient, innovative for more than a century, and I definitely wouldn't be betting against them. So please like, please subscribe, and I'll see you on the next one.